Stop watching prices. They are the last thing to change. The real story is in the plumbing of the system, and the plumbing just broke. In just 7 days, traders demanded physical delivery of over a quarter of all the silver available on a major exchange. Not next month, now. That is not trading behavior. That is the beginning of a bank run. Every financial crisis starts the exact same way. Not with falling prices, but with a sudden, catastrophic loss of confidence. Once that trust is gone, it does not come back. Stay with me, because I'm going to show you the mechanism of how confidence collapses, why silver is the first crack in the dam, and what insiders know that you don't. For decades, they sold us a story of control, that central banks could manage any crisis, that price was the final word on value. 2008 proved that story was a lie. The system froze solid, not from a lack of money, but because trust evaporated overnight. Banks refused to lend to each other, terrified their counterparts were insolvent. The response was to flood the world with freshly printed money, promising the system was now safe. But that control is an illusion. The money in your bank account is a shared belief, nothing more. It is a confidence game. The real job of a central bank isn't to manage the economy, it's to manage your confidence. Every policy, every press conference, is a performance designed to make you believe the system is sound. You cannot print confidence, and when it disappears, it happens in an instant. This is not a theory, it is a historical fact. History is a graveyard of systems that lost the public's trust. The great banking panics of early American history were confidence crises. They culminated in the Great Depression, where thousands of banks failed not because they were worthless, but because the belief in them evaporated. In 2007, the UK witnessed its first bank run in over 140 years on Northern Rock. Government assurances that the bank was solvent were worthless to the people lined up outside, demanding their money. These moments reveal a terrifying truth. Solvency is irrelevant during a panic. A bank can have perfect assets, but if it cannot meet withdrawal demands, it will fail. The 2008 crisis was the global version of this. Trust between the world's largest financial institutions vanished, freezing the entire global credit system. We have since built an even more complex, interconnected system on that same fragile foundation. And that is where the danger now moves from a single bank to the entire system. This brings us to silver. The silver market is where the illusion of paper price is smashing into the reality of physical demand. This is what it looks like when the world stops trusting paper promises. For 5 consecutive years, global silver demand has massively outstripped supply. The World Silver Survey confirmed a deficit of 148.9 million ounces in 2024 alone. The cumulative shortfall since 2021 is a staggering 678 million ounces. This is a structural shortage, driven by insatiable industrial demand for solar panels, EVs, and electronics. When deficits run this long, the vaults are bled dry. Stockpiles in the global hubs of London and New York are being drained to cover the gap. By 2025, eligible silver stocks at the London Bullion Market Association, LBMA, had shrunk to just 155 million ounces. This is creating unbearable stress. Now, the price itself is fracturing, a classic sign of collapsing confidence. The price for physical silver in Shanghai has been trading at a massive premium to the paper price in New York, at times nearly $10 an ounce higher. In a healthy market, arbitrage would close that gap instantly. Its persistence is a fire alarm signaling a real, physical shortage that paper markets can no longer hide. This loss of confidence is now explosive on the COMEX exchange. We are seeing traders demand physical delivery of their silver now. In a single week in early January 2026, a stunning 33.45 million ounces of silver were physically withdrawn. 26% of the exchange's entire registered inventory, gone in 7 days. This is not normal. This is the behavior of people who are terrified the metal won't be there if they wait. It is a bank run on a commodities exchange. Finally, governments are officially admitting the problem. In November 2025, the US government added silver to the list of critical minerals for the first time. This is a strategic admission that securing physical supply is now a matter of national security. The problem has escalated from a market issue to a state-level crisis. What we're witnessing is a fundamental breakdown that goes far beyond one market. If you are getting value from this analysis and want to understand the deeper forces that are breaking our world, do me a favor and hit that subscribe button and the notification bell. We are dedicated to exposing the stories the mainstream media refuses to touch. The failure in the silver market is not a preview. It's the first domino. It proves the entire global financial system is held together by confidence, not by price. The silver market is showing that a paper claim is only as good as the belief that you can trade it for the real thing. Our financial system has created trillions in paper claims, stocks, bonds, derivatives, that dwarf the real-world assets they supposedly represent. The entire structure works only on the assumption that just a fraction of people will ever ask for delivery at the same time. It assumes you will never call the bluff. The silver market is the first place where a significant number of players are calling the bluff. They are showing up at the bank and demanding the real thing. And the system is visibly breaking as it strains to deliver. The implications are enormous. What happens when investors lose confidence in the full faith and credit of governments that are drowning in debt? What happens when the world loses trust in the US dollar? The quiet exodus has already begun. Central banks worldwide are moving away from the dollar. The dollar's share of disclosed global reserves has fallen from over 70% in 2000 to around 56% by mid-2025. This is a slow, methodical vote of no confidence in the system's single point of failure. The lesson from silver is this: price is the last thing to change. It is a lagging indicator. Confidence is the leading indicator. The smart money, the industrial users, and the nation states are not watching the price. They are watching the inventory. They are moving from paper promises to hard assets because they know that in a crisis, the price on a screen is meaningless if you can't get the asset. We started with a fatalistic idea. Our financial system is built on the shifting sands of human confidence. We've seen how losing that trust triggered every major collapse in history, from the bank runs of the Great Depression to the global credit freeze of 2008. Then, we saw the hard evidence of it happening right now in the silver market. 5 straight years of supply deficits, vaults being drained to critical levels, a global price that is physically breaking apart, and the US government declaring silver a strategic national security asset. These are the tremors before the earthquake. The silver market is the canary in the coal mine, screaming that the paper pricing system, the very foundation of our financial world, is failing. The mainstream will tell you to watch the ticker, that everything is fine. But the real story isn't in the price. It's in the plumbing. It's in the vaults. And the vaults are emptying. By the time the price on your screen reflects this reality, the exits will be gone. The system is telling you the price is fine, while insiders are running for the doors with the physical asset. Who are you going to believe? Let me know in the comments.